and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Monday morning, the next trading week, or should we say the first trading week for the new month of April. Of course, we have a lot of interesting fundamentals coming out this week, each and every day. First of all, of course, we're focusing again on the US dollar. It slightly fell on Friday last week as, of course, Federal Reserve's dovish remarks and, of course, unsurprising data on US economy clouded the over bullish outlook. That, of course, came out from the New York Fed President William Dudley. Also, he, as we mentioned, is seen as one of the most important members of the Fed Interest Rate Settlers Committee. Of course, Dudley said the central bank, I quote, was in no rush to trigger monetary policy. His comments, of course, followed less than impressive data out of the US. Of course, that was the consumer spending that showed that even the confidence hit its highest peak in the last 16 years. Americans are still shy on spending. Of course, let's have a look on what to expect throughout the week. Starting from today, out of the European Union, we have the unemployment rate and producer price index. Also, we have high volatility expectations just ahead of the US session for the ISM Manufacturing Purchasing Managers Index, and of course construction spending. Also, of course, we have total vehicle sales. These are data with, let's say, low volatility. However, what else we have for Tuesday? We're looking at the Purchasing Managers Index construction for United Kingdom, and also looking for retail sales out of out of the European Union, trade balance for United States, and of course factory orders. Slightly after the start of the US session tomorrow, we're going to see also the weekly bulletin out of the American Petroleum Institute for crude oil stockpiles, and of course the actual data that is going to come out on Wednesday from the Energy Information Administration. Before that, of course, we're looking at on Wednesday non-monetary policy out of the European Union, and also Bank of Japan's Governor Kuroda is going to have a speech. All of this with high volatility expectations, major announcements out of most of the governments around the world. Of course, we're looking at throughout the European session market purchasing managers index composite. That's for Germany. Also market services PMI as well out of the EU. And later into the session, we're looking at a Federal Open Market Committee minutes. Of course, before that, we are going to see the ISM non-manufacturing sectors purchasing managers index. And of course, the very important ADP employment change out of the United States, ahead, of course, of the most important data that's going to come out tomorrow. But before that, on Friday. On Thursday, however, we're having a meeting between President Donald Trump and Xi Jinping. So this is also a data that is going to be mostly watched from traders around the world. It's going to affect major currencies and commodities, especially gold prices as well. Also, throughout the day, we're looking at the ECB monetary policy meeting, continuing jobless claims and initial jobless claims out of the US. And of course, for the final day of the week on Friday, we're looking at the most important data that the markets will be pricing in throughout the week. We're looking at the manufacturing production out of the United Kingdom, and of course non-farm payrolls and unemployment rate out of the US. Along with that, tired to news, Baker Hughes US oil rig counts, and of course consumer construction credit change. Before that, in the morning, of course, we're going to see some data out of the European Union for Germany, imports and exports data, industrial production, and of course trade balance. That's all from what we're expecting throughout the week. Of course, let's have a look at the charts here to see how the markets are pricing in for all of that major data, inflationary data that is coming out throughout the week. We're looking at the euro versus the dollar as usual, 1 hour chart. We're seeing some further decline on pair, mostly on the greenback, taking a little bit of charge on it. We're looking, of course, at a confirmation below that particular level, 1.066, and of course, if we see that, we can expect further decline below that formation level, 1.066. Of course, before that, we're just going to monitor the pair for further clues on where's to go. A British pound still remains on the sidelines, mostly unchanged, but it's above the 1.25 area. For now, we can expect some more upside as there is a lot of important UK data, and after, of course, the government triggered Article 50 for Brexit, we can still see some strength in the British pound. Declines, of course, are not expected in the near term, unless, of course, we see some really, let's rephrase, gravitational change in the inflation of United States. This, of course, would, of course, give ground for further declines. For now, the major data that is expected during the week, numbers probably are not going to be so dramatic within change. So right now, we're mostly looking at how the markets are pricing in for further fundamental clues. I'm going to keep you up to date throughout the week. Dollar-yen pair looking at 111.40. Little changed, but still higher above the 50 exponential, but in a very, very tight range between 200 and 50 exponential moving average. There's nothing much we can do there. It's firmly to the sidelines. Gold prices, of course, are testing right now the 200 exponential moving average, as we can see. After bouncing overnight, you can see after declining in the previous week, slightly below the 1240 area, but of course it remained above 1242, which is a very, very important support level to be sustained. This is the candle we saw on Friday that maintained the commodity above the 250 exponential moving average. Of course, throughout the session, the Asian session, we saw mostly sidelines direction. Early European trade slide to the 200 exponential, and of course, if it breaks it, another test of the 1242 can also be expected. Crude oil prices, of course, they have confirmed with a weekly close above the key $50 area, where, of course, we're going to be looking for some more upsides. The next resistance is at 50.80, as we can see. A break above it will take the commodity to 51.40. This is the next key area, and 52, of course, is the pivot from where further upside could be expected, should, of course, the commodity receives some more interesting and, let's say, some positive data out of the American Petroleum Institute, the Energy Information Administration throughout the week, tomorrow and the day after, and, of course, should we get some clues out of the Organization of Petroleum Exporting Countries for some more cuts of production. That's all of the most important data of today, of course, and throughout the week, so what we can expect. And, of course, I'm going to keep you up to date tomorrow again, and I'm going to see you then. Thank you very much for joining me. See you then. Bye-bye.